We have another company which posted results, and we have the management joining us. Marico reported a strong set of Q4 FY21 earnings. Saugata Gupta, MD and CEO of Marico, joins us now. Thank you very much for joining us, Mr. Gupta. Now, it's been a phenomenal performance across all verticals, and this is not only on a favorable base, right? But we've also seen the last 2 years that it's still been quite a good performance. How much of this do you think is sustainable?
So I think if you really look at it, ever since, and this was beginning of the COVID, in fact, from sometime around 2019, October, December quarter, we have been starting to do certain things to get the volume momentum back on track. Three things I would talk about. First, focus on a few things big. Second, I think there were some issues in terms of whether it's pricing, communication, and the mix of a certain brands in the value-added hair oil growth, and therefore the focus on getting those right. And third is, I would say, that significant focus on execution. And lastly, I think the new innovation agenda in terms of refocusing on foods, driving scale innovation in foods. I think all this are all together working, and I would say that this momentum, we are in the beginning of a volume momentum, and that is why we took a conscious call, in spite of significant inflation, to absorb some of these cost pushes, make some short-term sacrifices on margins so that this volume momentum is not compromised. And lastly, I must say the other thing that is helping is we have undertaken a significant improvement and expansion in rural distribution.
All right, you have taken an expansion. So in that case, would you also look at upping your guidance? Because you did give a volume guidance of 10%, but do you think it could go beyond that now?
So if you look at the 4-year, 5-year trend, and I'm not talking of Marico, but broadly the last 3-4 year trend in the sector, the growth has been 6 to 7%. So I think we are targeting an aspirational number of slightly higher than the sector average. And if we look at the volume growth in most of the categories we participate. Also, you must realize there is a bit of an uncertainty right now in terms of this quarter. We believe that this current surge will take time to stabilize. Although this time we are far better prepared in supply chain. I think there are local disruptions. We have to take care of our people, given that there is likely to some disruptions continuing till May. So as a result, I believe that even if we can deliver 8 to 10% volume growth, it will be a good performance.
So speaking of that uncertainty, could you also quantify that impact on business that you've seen in the last month because of this second wave of COVID that we're seeing across the country? What do you think Q1 is likely to look like?
So it's difficult to, I think, give a number to it. I'll tell you why. Because we are not seeing any, I don't see any consumption-driven impact, because at the end of the day, 90% of our product portfolio is items of daily consumption. There are not many product categories which are driven by out-of-home consumption or linked to, for example, whether people going out and therefore using my categories other than very minimal, the non-sticky premium hair oils part and maybe male grooming. Other than that, everything is in-house consumption. So therefore, and in fact, given that people are staying at home, our edible oil and food business is likely to get a further boost. So therefore, I don't think it's an issue of consumption. It is an issue we faced last time also, when we had a very bad April and then we got back on track in May and June. It's that because of the localized lockdowns, also the fact this time there are restricted working hours as far as groceries concerned, and also significant portion of the people are impacted. So therefore, there is some disruption in terms of the last mile supply chain, not in the factory to the depot, but the last mile supply chain. We are trying to use alternative means, and they were stress tested last time, like for example, telecalling and other means to supply, because the demand is there. Obviously, we are dialing up e-commerce because brick and mortar modern retail is going to suffer. So if we see all that, and unless the situation worsens from here, I think and it will be in phases, because different states will plateau in different phases. We have a model in place broadly. I think sometime by the last week of May, things will start again improving. And therefore, this catch-up, which is there, we can be done over June, July.
Okay, that's good to hear that the catch-up can be done in the next 2 or 3 months. But I also have to ask you about the raw material inflation. You know, we've seen a sharp decline in the gross margins come through. Do you think this has peaked off, or could we see margins continue to be hit even in the next quarter?
Let me just put a perspective. There are three key raw materials. One is copra, one is the other edible oil, which is the vegetable oils like sunflower and rice bran. The third is crude related, which is crude, which has impact on even packaging. Now, if I look at copra, copra was supposed to come down in February by 7-8%. Instead, it went up by 8-9% because of a late arrival and some local issues. And therefore, we have seen that correction. So that correction that should have happened in Feb-March has now happened in April. As you know, we hold stocks a little bit because there is inventory of raw material, the inventory of FG. So therefore, this likely impact on margins will come towards the end of this quarter. As far as vegetable oil is concerned, the other two, sunflower and rice bran, there has been a significant push, some in the order of 50-60%. We took a 30% price increase in Saffola between H2 and then has taken another 20, so total around 50 to make it up. Having said that, obviously price increases are lagging input cost increases because we can't take frequent pricing actions. We have to wait and then take action. Crude, again, I think if it's at anything, it goes above 65 for the balance of the year, there could be certain impact. So I would say that we had hit the bottom of the operating margin in terms of Q4 is concerned. It will start continuously improving from now on and definitely get back into the medium term levels by second half.
Okay, so margins should improve by the second half. But let me also ask you about the rural demand then. What is the kind of demand that you're seeing in rural areas in tier 2 and 3 cities? And what is your outlook as far as increasing distribution in these places goes?
So let me first address the distribution first. Last year, we increased our rural distribution by 25% in terms of addition of new stockists. We are targeting the same 25 to 30%. Obviously, we had plans, big plans starting this financial year. In April, we have put a kind of a stop to it till the situation normalizes. But we hope by June, July, we can start that process. Regarding rural consumption, I think, yes, and that is why we are being careful about pricing. At the same time, we believe that direct distribution is a source of competitive advantage. We compete with a lot of small and unorganized players. And I believe in a lot of cases, availability equal to market share if we get the pricing right.
Okay, Mr. Gupta, just one final question, and this is on the foods business. You did over 130% growth in Q4. You also crossed that 300 crore mark in FY21. What is your FY22 outlook and what is your long-term outlook for the company?
So I think we are still targeting a 450 to 500 crores this year. And of course, by 2024, at least 850 crore business. I think we aspire to start growing every year at 40%. Now, the issue is that obviously there could be some short-term disruptions in terms of more distribution. I don't think there's any consumption issue. We are doing well in honey and nuggets. Oodles, which is too early because we are just about, we started distributing in March and April when this COVID hit. But I believe that we now have a robust portfolio in foods. Also the core, which is the oats and masala oats, have broken even. They are doing very well. They are growing also significantly in penetration. So I think we are, I think we have a sweet spot as far as food is concerned in our food strategy and in terms of chasing scale instead of doing multiple niches, and we are pretty confident about the future.
All right, Mr. Gupta, thank you very much for joining us this afternoon and taking us through your outlook as well as helping us talk about the performance. We really appreciate your time on this channel and thank you once again for joining us. But with that, we're completely out of time. We've really overshot in the show. I'll take your leave on this edition of Business Lunch. Thanks a lot for tuning in and stay tuned. Midcap Radar comes up next.